In 2008, a financial planner named Robert Kiyosaki, the guy who wrote Rich Dad, Poor Dad, told everybody who would listen that gold was going to $10,000 an ounce. Last week, that same guy doubled down. He's now calling for $35,000 gold. And on social media this morning, a million people are screaming back at him that he's wrong, that Bitcoin is the new gold, and that anybody still buying the yellow metal in 2026 is about to get destroyed. That fight, the oldest fight in modern finance, just lit up my market intelligence system in a way I've never seen before. And the ticker it lit up is not the one that you would expect. Welcome to Invest AI Savvy, where AI powers smart investing. Welcome to Tuesday, May 26, 2026. Now, quick reminder if you're new here, my name's Ken Carpenter. I'm not a trader. I've got an MBA in finance, and I had AI build me a market intelligence system called BuzzPulse, and you're watching me run it in public. I don't personally trade these signals unless they're really good. And I read what the system finds, and then I tell you what I see. The ticker on my screen right now is GOLD, not the commodity, the stock. That ticker belongs to Barrick Gold Corporation, a Canadian company that does one thing for a living. They dig gold out of the ground and they sell it. It closed Monday at $43.40. And overnight, 9 separate signals fired on this name at the same time. On a morning where the rest of the market is basically asleep, this one name is making noise like a fire alarm. Quick housekeeping, this show's for educational purposes only. It's not investment advice. So please do your own research, consult a licensed professional, do your own diligence. Now back to the fire alarm. Here's the first thing that caught my eye this morning. BuzzPulse pulls social data from one source. Lunar Crush pulls it from another. They almost never agree because they're looking at different corners of the internet. This morning, they agreed. Both systems independently flagged Barrick. Lunar Crush is showing mentions up 55% week over week. And one number that made me stop scrolling. Social dominance is up 1,179% in 7 days. That measures how much of all financial conversation on the network is about this one ticker, GOLD. It's gone up by a factor of more than 10 in a week. Something's happening. And then I went one layer deep to read what people were actually saying. That's where this gets weird. Lunar Crush breaks the conversation into themes. 40% of all that chatter is people calling for the price of gold to crash. To be clear, gold is the metal, not the stock market. 20% is people arguing capital is rotating out of precious metals into Bitcoin. 20% are traders watching for a bounce. And 10% is the long-term store of value crowd, Kiyosaki and his $35,000 prediction. And almost none of these conversations are about Barrick, the company with the ticker symbol. They're about the metal gold. And they're all tagged to the ticker GOLD because the ticker is literally the word gold, even though the company underneath is a mining operation in Toronto. What the system surfaced is what I call a spillover signal. A few million people are arguing whether gold is dead money or the next $35,000 moonshot. And that argument is so loud, it's bleeding through to a stock that just happens to share the same ticker name. The math cannot tell the difference between a conversation about Barrick and a conversation about gold bullion. It just sees the symbol. This is the trap every retail trader using AI sentiment tools is going to fall into eventually. The same thing happens on SPY when the argument is really about the S&P 500, or TSLA when the argument is really about Elon Musk and not car deliveries. When a ticker is a proxy for something bigger than itself, the chatter is not really about the company, it's about the thing the ticker stands for. Learn to spot that and you're going to save yourself a lot of money. So is the spillover a bug or a feature? The honest answer is it really depends. Barrick does one thing for a living: dig gold, sell gold. When the price of gold goes up, Barrick makes money on every ounce. When the price goes down, Barrick makes a little bit less. The stock is welded to the commodity. So a giant social surge on gold, the metal, is not unrelated to Barrick, the company. It's often the early warning that a story is about to cross from the commodity world over to the equity world. The spillover is not pure noise, it's a leading indicator. The question is whether it has to be in place to call it a real setup. This is where the other layers earn their keep. First, short interest is at 13%. Short interest is the percentage of a company's shares that have been borrowed and sold by traders betting the price will go down. 13% is high. The average stock of the S&P 500 runs around 2 to 4% short interest. A meaningful crowd is betting against Barrick. That matters because if the stock starts moving up, those traders have to buy shares to close their bets. And that forced buying becomes its own fuel on the move. Traders call that a short squeeze. This is how GameStop went to $400 in 2021. The setup is not the same. The mechanism is. Second, IV rank at 0. Now, IV rank measures how expensive options are compared to the last 12 months of trading. A reading of 0 means options are at the cheapest they've been in a year. Options get cheap when the market expects the stock to stay still. So the options market is telling you nothing is going to happen. Meanwhile, social media is telling us everything is about to happen. The crowd is screaming. The options market is yawning. Both can't be right, and one of them is about to find out. Now, third momentum confirmed, the price is moving in the same direction as the social surge, not the opposite. On Barrick this morning, both are pointing the same way. Modestly up, but the same way. The stock itself sits in the middle of a 12-month range, well off the February high of $64.10 and well above the December low of $29.80. Not at extremes in either direction, which is the kind of zone where a move can develop without fighting gravity. Now, put it together, a spillover signal from the biggest argument in finance, two independent systems flagging the same name, elevated short interest that could fuel a squeeze, options pricing as if nothing is happening on a day when something clearly is. Momentum pointing the same way as the chatter. On paper, the system is making a real case. Now, back to the hook. 96% sentiment on this ticker, 40% of the conversation calling for a crash. Both numbers are correct. They are measuring different things. Sentiment is scored at the post level, and most posts about a crash are framed as opportunity. As in, gold is crashing. This is the buying opportunity of a generation. The model reads that as positive because the post is positive. The theme is bearish. The sentiment is bullish. If you only look at the headline number, you will get the story wrong half the time. Every sentiment tool on the market right now is built on the same assumption that the conversation about a ticker is the conversation about the company. That works most of the time, but it breaks on tickers that are proxies for something bigger. Reading which one you're looking at is a whole skill. Now for the cautionary tale, because the system gave me a perfect one this morning. The watch list tells you where to look, and the greed list tells you where the trap is. The second name BuzzPulse flag today is the ticker DJIA. Now, you probably just thought that's the Dow, and that's exactly the problem. DJIA, the ticker, is a tiny, obscure, exchange-traded note that almost nobody trades. It closed Friday at $21.79. But the social chatter the system picked up is almost certainly people talking about the Dow Jones Industrial Average, the index of 30 huge companies that has been on the news every night since 1928. The system flagged the ticker, and the conversation is about something else entirely. If you saw that signal and bought DJIA thinking you were getting exposure to the Dow, you would be very wrong and very surprised. This is exactly why I am building this show. The system finds anomalies. Reading them correctly is the work. I'm going to flag both Barrick and DJIA on the record this morning, and we're going to see how each one resolves. One is a setup, the other is a lesson. Tomorrow morning, I'll be back with a price on Barrick and an honest answer to the question the system asked today. Either the 9-layer convergence on a gold proxy was early and right, or it was loud and wrong. Both outcomes are educational. Both go on the record. I'm Ken Carpenter. This is Invest AI Savvy, and that's the way it is.